Okay, welcome back to Cymax FinTech Weekly Market Insight. This is part three. So far in part one and part two, we've covered what happened last week. We've covered what we're looking at coming out this week. Now we're just looking at sort of the bigger picture, sort of the macro outlook going forward. So when we look at this, inflation is obviously still a massive focus for everybody, households, because of obviously it's eating into their disposable income, central banks because it's nowhere near their 2% target. But inflation is dropping, but it's just such a very slow pace. Rate hikes, of course, are having some impact on spending. However, for me, it's much more prices that are deterring households from spending, or it's because simply they don't have the money to spend. So, in the US, we saw PCE was still up. It's 5% year on year, which is still 2.5 times the Fed's target rate. How can they bring that down when they've already put rates up so high? For me, they just need to sort of just wait. They probably feel that they need to go further. Although obviously the banking crisis hasn't helped, and Yellen ruled out sort of the FDIC, uh, you know, out there for all to sort of guarantee all deposits. And of course, eventually that could lead to some form of a credit crunch. So we just need to be a little bit careful and keep our eyes open for that. It's going to make it more difficult to borrow for sure, which is, effectively another way of reducing spending. So, how long it's going to take the regulators to come up with the new rules, though, it could be weeks, it could be months, it could be years, who knows with them. But the banking sector had probably a better week, except for the one that was downgraded, Charles Schwab. One issue is for some of the banks, and I've mentioned this before, it's just so easy to move your cash around these days. It's simply just the press of a button. So, that's not doing the banks any favour, really. Now, okay, so Q1 is over now. For me, what I'm really looking at now, and what I'm going to be really keen to see are the firm's earnings. All these corporations, have they really, really taken advantage of the consumers? So it's going to be good to sort of highlight which sectors and indeed actually which corporations are really squeezing consumers to boost their profit margins. And I've definitely got my ideas on that, and my focus is really on the food industry there. Now, despite sort of a lot of these costs returning to pre-COVID and pre-Russia-Ukraine war levels, the firms are just holding on to those savings. Especially because there's been so much hype over inflation, I think, from governments, central banks, in the papers, everywhere, that, it's given them an excuse. And for me, as I say, I personally believe the food industry is the biggest villain, with these food giants really abusing the opportunity to make massive profits, while obviously households are struggling. It's not even just the lower income, it's the middle income earners as well. Now, central banks, for me, again, I just think they need to take a breather and sort of let the economies just play catch up. It does take, there's a massive lag between, all these rate hikes that they've done, and in the economy, and that demand of it. And it's at least a few months for that all to sort of filter through. And of course, if there is a credit crunch, then, we could find, first of all, we go into a pretty deep recession, which we was obviously all hoping to avoid. But there could also sort of just come out a few zombie firms, a few zombie banks. They're alive, but in reality they shouldn't be. Well, they're walking. But is that going to happen? I'm not really sure. But if we do get close to a credit crunch, then I can see that. And of course, in the US, the dollar's been losing value, especially this year. And that's going to help to hold inflation up in the US because they're going to be importing some of that inflation, because it's going to take more of their dollars to buy some of these goods in. And also remember, that a weaker USD also adds demand generally for commodities, such as oil, gold, silver, I mean, even Bitcoin. Now, I would point out that sort of agricultural prices are still weaker. Probably the only exceptions to that are maybe corn and coffee and possibly sugar. But with OPEC announcing this surprise cut of over 1 million barrels a day, watch out for oil this week. I can see that having a spike for sure. Now, lots to see if can stocks maintain their momentum. I mean, they've been propped up again by some of these Titan companies, Apple, I think Microsoft as well, Tesla, and possibly even Netflix. But can they hold it up? And again, what you got to remember when you look at some of these indices, that it's only these titans that really impact the whole index. Of course, even though it's Easter next weekend, we will still be adding a YouTube to help you prepare for the week ahead. So please don't forget to check for that. I'm going to wish you happy Easter now, but this is not the end of it because, as usual, we've got part 4, which is all about our technical analysis, which is going to provide you with support resistance levels, possibly some breakout levels as well, which is, again, just worth holding on for. So that's in part 4.